Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar took another step to the downside after taking out the level of 73.65 and plummets to a low of 73.20. This seen as an 8-month low as the US dollar, which measures the greenback strength against a basket of 6 major currencies, surges to its objective of 93 figure before trimming back some of those gains. It is assessed from the technical outlook that with the bullish divergence negated now, and also with the ADX strengthening to the bear case, could see further losses. However, we do need to be a little bit cautious to that call as we are oversold. But looking at the ADX, supporting a bearish case, and with the MACD also declining, a close under 73.15, which is very close, could see the next target of 72.60 and reassess from there. Now, as I mentioned, the dollar index did reach its objective of 93 figure before easing back to 92.80. From the technical pattern here, I'm still a little bit cautious in coming out with any bearish calls under 117.50. Due to that is the fact is that we've reached the objective. We've got a somewhat spinning bottom as market is indecisive in taking the challenge lower, and also with the slight hesitation to the dollar index after claiming 93 backed away very sharply. I feel there is still one more challenge to the top side, anywhere from 93 figure 60. That would see the euro challenge this level of 117.50. Now, if you are trading from the bear side, do remember to continue to lower your stop losses according to your risk management, just in case this pattern, this wedge, decides to snap to the upside. So therefore could see short-term scramble, as I would call it, as the market tries to get back their position. The MACD is holding to a weak positive signal, so therefore we could see this reversal. Nevertheless, with the dollar index being the leading indicator, the fact is that we could see this further step down and may see another doji in play or spinning top or something along those lines to indicate hesitation or indecisiveness. The dollar yen took a significant downturn overnight, crushes the level of 109.60 and now exposes the region of 108.45. It is from there I feel the market may stage a bullish recovery. Nevertheless, from a technical pattern, the RSI is buckled underneath the midway point. We do have a negative MACD, and also in some respects keep an eye on this ADX in case it starts strengthening to a bear case. With the market rushing to safe haven assets, as in gold or yen in this case, the fact is that we might see a little bit more strength in the yen to a weaker dollar that will push this market down due to the situation of the market jitters to the COVID variant. With the pound crushing the level of 137.40 area, the market has actually staged the next target of 136.55. It is assessed that we could actually go lower to 135.60 due to the fact that we are trending to a bear case. The market is still dropping in terms of the daily indicators and also still weakening with the weeklies. Could see that down to our target. As I mentioned, 135.60 reached. Therefore, could see sterling yen continue its drop. Now, with the two legs being being somewhat yen strength and sterling weakness, now extends the target. For the first call was at 151, now down to 150, which is reached, and looking down towards the next objective, 148.70, 75. And I feel that is where the market may actually turn around or see some profit taking, because we are oversold. But in terms of this candle, could see a little bit more of a clear out to the downside. And as I say, look towards the region, as I mentioned, close to around that 148.70, 75. So a little bit more left here, but the trend still strengthening to a bear case, and the MACD is still negative as these two, the MAC and also the signal line, is dropping. Very whipsaw price action in gold and ends with a dragonfly doji after the market stepped in very sharply in front of that trigger level at 1,786.88 after printing a low of 1,794. Now, from the rebound and from this candle, and also the fact from the rebound off the midway point of the RSI, can see a short squeeze up to 1,824 to 28, with the cap still above at 1,833 to 35. Now, like before, we may see another rejection and look back towards the downside to 86 and reassess from there. A very, very volatile night for oil after it crushes through the levels of 69.5 and 68.70 to post a low, that is, of 65.50, last seen back in September 2020. It is assessed, though, there is still room for further weakness due to the trend and also with the indicators looking quite heavy. Now, it's very hard to pinpoint a target, but at this point, we've got to have a point of reference, and that is around $62 a barrel as a potential target. If you see how the market moved, $4, which was about 8% overnight, well, the next move down could be another $4. And there's your target reached at 62. So it's not a big call after last night's move. Nevertheless, if you are trading from the short side, remember to lower your stop losses as the market slides further and further, in case we do see a reversal. Now, when I say lower your stop losses, that is according to your risk management. It's really down to you on how you actually trade these markets. But nevertheless, in terms of how the technical band with the key reversal and then the market reversal, and then we've got another indecisiveness followed by this heavy candle, the trend coming through the ADX, MACD still holding very heavily, still supports that downside call. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.